All right, it looks like we're live. Let me know if you can hear me and see me well. Clive is coming on in about 10 minutes. If you're watching this recorded uh, and you don't want to listen to the first 10 minutes, because I usually come on a little early and say hello to everyone, skip 10 minutes forward. That's when we're going to start talking about the topic of the live stream. Well, the title of the live stream tonight is um, History is Telling Us Economic, Political, and Social Chaos Are a Real Possibility. And that, of course, is for 2024 and beyond. And I don't want to sound dramatic or negative, but I want to be realistic. I think there's a lot of things that are, yeah, a lot of things that are worrying, and that's what we're going to talk about today. Doesn't mean to say that we can't survive and thrive under these conditions. So it's nice to see that there's quite a few of you already here. Let's have a look. We've got 153 people so far. We've got Mike Sorrento, the boy who cried wolf. He says, uh, Mike Sorrento says fear porn. I guess you can, if you're not interested, then it's not fear. It's not fear porn. It's just that all we get in the mainstream media and from the mainstream economic class is that things are fine. They don't understand. They don't look under the bonnet or the hood of the car. And by that, I mean they don't look at the debt situation and how that affects everything. They don't understand what inflation really is. So hopefully, yeah, what we talk about here will help you kind of weather the storm that we're already in a storm. I mean, yeah. So Jimmy Hat says, "Hi Mario, salad. Neo's Hun Dynasty is here. Moonraker, Tyler Pelletier, Niagara, Ontario, Canada. Marie Duremus says, good evening. Living the Dream says, good morning. He's probably in Australia, or she's probably in Australia, or maybe even Japan or New Zealand. Andrew Bevan from Quanbrun, I think that's how you pronounce it, says, hello, Sunny. Yeah. Belly Dance Rabe is here. Frank Cervini. Hello, Frank. Stingray 9 times 9. Hello. Charles Owen, greedy wholesomeness. Frank Peter, good day, Frank. Jim Millward, hi Jim, nice to see you. Happy New Year, any by the way, to everyone. It is yeah, January 7th. It's the first I think this is the first live stream I've done this year. Yeah. I didn't do one on New Year's Eve. That's when it was, Sunday. Uh Jim Millward says, those who panic first panic best. Yeah. If you don't prepare and you don't have insurance, when the accident happens, you won't be yeah, you won't be prepared. Quadman 72. Hello, Quadman. Silver Beast, Tony Trump is here. Larry Young from Tallahassee. Sorry, Tennessee, not Tallahassee. Jeff McCarthy, thank you for your super chat. Says everything's fine. Wink, wink. Uh, Zabinator from Australia. So I think I'm gonna have to get rid of this Mike Sorrento. Let's see. Hide user from this channel. There you go. He's out. Hi, Michael Kennedy. Ponzi stocks only go up. Well, in Venezuela, some years ago when they had their hyperinflation, the Venezuelan stock market index was the best performing in the world. So doesn't mean much. Rick says, have you thought about having Keith Weiner on your show? Yeah, I know Keith and I have had him on. Yeah, maybe I will get him on again. SMZ, will you do a UK meetup? No, no, I'm not doing that. Yeah, I think doing what I've met actually a few of the viewers by accident. Um, but one of them is I met him at a coin shop in London, but I don't plan to do a meetup, not really. Not because I don't like you guys, but I just don't think I don't know. It's just not something that I've thought of. I think I want to stick to doing what I do here online. Who knows? Maybe I'll change my mind in the future. Over here is here. Frank Frank Cervini, did you hear of aliens in Miami? Yeah, I saw that headline. I don't buy into all that rubbish. It's another distraction, I think, personally. Yeah, Miami. Why would they pick Miami? Uh, yeah. Mike Kennedy, also same as Sorrento bot. Where's Mike Kennedy then? We'll get rid of him too. Check out Uneducated Economist. Yeah, I know an uneducated economist, Jeff Wolf. I think my wife watched him a few times. Over here, yeah, I do follow Mitch Firestein on on Twitter or X. He used to go on the Max Kaiser show on RT. Yeah, he's a good guy, I think. Maybe I try to get him on. He's wrote in a book something called Ponzi World or Ponzi Economics. He's an American based in London, Mitch Firestein. So Clive is coming on. Let's see, he's just arriving here. Dilwyn Roberts says we could all meet up in the precious metals holders prison. Yeah, Belmarsh. Maybe they'll put us in Belmarsh, like what's his name? Julian Assange. Hi, Clive. Happy New Year.
Hello, Mario. Can you hear me okay?
Yeah, yeah, we can.
Happy New Year to you and Happy New Year to all your listeners and viewers.
Thank you. Thank you. So, Rayfoot says, hi, Mario Clive. Looking forward to tonight's chat. Great work, lads. So you had a good time for New Year's, a bit of a break, even though you are on a continuous break now that you're retired.
That's true. We went up to Crans-Montana in Switzerland, which is a very famous Swiss skiing resort. It wasn't that crowded, in my opinion, although the authorities were saying they're quite pleased with the turnout. Last year there was no snow, and I think some people were put off by that, so they didn't come this
Yeah,
year. And of course, the Swiss franc is quite strong. It's gone
yeah,
from 1 to 1 against the dollar down to about 80 cents nearly
yeah,
against the dollar, which makes it quite expensive, or 20% more expensive than it was.
yeah.
So yeah, that was why it's a little bit fewer people, but plenty of space, lovely snow, great
Good.
skiing.
Someone is asking me here, Mick asking, do you watch George Gammon? Well, I don't because I don't really have anything to listen to from George Gammon. George Gammon's been around since 2019, and yeah, I don't listen to him. I think maybe my wife listened to him years ago, but no, I don't. I mean, I did a kind of a chat with him and Mike and a few other guys, like a private chat. And he didn't have much to say, so I thought, why bring him on my channel? But maybe I don't know if people ask for me to interview him, I might think about it. Yeah, Clive, the you probably seen the title of the live stream is and I'm not trying to be negative or anything, but I just think there's so many things out there that it makes me concerned about what's going on in the world. So it is history is telling us economic, political, and social chaos are a real possibility. Do you think that's a little bit too? I mean, I had to someone was saying it was fear porn. What do you think?
Well, I think every year in my 50 years of career, we've had plenty of predictions of disaster for the year to come. This is not unusual. Um, uh, to say that I mean there are disasters every year of some description. They're very very common, and at the time they seem quite scary. But when you look back on them, they with hindsight, they didn't look scary at all because we're still around and nothing much happened to us individually. So I have no doubt that during the course of this year, some things are going to happen which are going to worry us all to death, and then we'll look back on it a few years later and say, hey, you know what, that was nothing.
Mm,
But there are some real risks out there which could be a lot worse than what we've seen in the past. But that's not new. There's always been big risks.
yeah, yeah. Someone is asking me here if I played 18 holes this morning. No, I didn't. I didn't play today, this weekend. I played on Thursday, so I took this morning off. It's quite cold, but I could have played. Um, yeah, I agree, Clive. I mean, in the beginning of every year, people try to guess things and say, things are. But I personally think, from reading about history, like fiat money, inflation in France, and what happened in Germany. I just think there's so many political problems out there, not just in the US. It seems so divided in the US, and there's a lot coming out about, Epstein or Epstein or about the January 6th, Tucker Carlson. I listened to him talking to a congressman who basically said that the FBI helped orchestrate, they egged on the Trump supporters and dressed as Trump supporters to orchestrate that January 6th, event. And I think that's pretty serious. So I think no matter who wins the election in the US, there's going to be trouble. Here as well, I mean, we have elections. The economic situation isn't great, even though we hear like this is like, for example, the the Daily Mail. I usually don't buy it, but he's saying, UK confounds naysayers, and here it says UK prepares for bounce back as economy trumps US and EU. And it's a bit misleading because the GDP in the US was 4% in the third quarter, and here it was just above zero. And they're saying this just because the PMIs were better. And then at the end of the article, it says US investment bank Goldman Sachs raised its forecast for UK GDP from zero point 0.5 to 0.6. So is the economy doing really well? I don't think so. What's your view on that?
Well, when you print money, it stimulates the economy. So I think a lot depends on how much they actually print in the current year. I haven't really studied the UK's situation, although my gut tells me they're going to print a lot of money. But it's certainly going to be true in the United States. The government over there has got a very high borrowing need relative to where it's been in the past, and they're going to have to print effectively, whether they print it via issuing treasury bonds to the market or the Federal Reserve stepping in and buying those treasury bonds. It doesn't really matter because treasury bonds for the man in the street are instantly convertible into cash if they want to anyway. So that's part of the money supply. So what's going to happen in the United States is the amount of treasuries and or cash is going to increase quite a lot. And that's quite stimulative to the economy. So whilst I think we might start to see signs of a recession, I think the result of that will be extra printing, whether it be by the Federal Reserve or by the Treasury issuing bonds, which will effectively be an increase in the total monetary mass. So I don't think the recession, which I think is coming, I don't think it's going to last that long. So on that front, I'd be quite positive. The more worrying point is what will happen if there's a crisis of confidence related to government debt somewhere, and that could be Japan, it could be the UK, it could be America, and potentially it could be Europe. Now, if there's a debt crisis, i.e., people start saying, I have indigestion, I've got enough government bonds, I don't want to buy any more, it means that interest rates are going to go up, and at least on the bond market, they'll go up. I mean, they can control the short end quite easily. And if interest rates start to rise, that will make it much more difficult for the governments to fund their deficits, because they'll be having a lot of maturing debt, which will have to be reissued or reborrowed, if you like, at a higher interest rate. And we're already at a pretty high level of interest relative to the tax take in the United States. And I'm sure that must be the case all around the world. So I think the worry I've got for the markets is what's going to happen in the debt markets. Will we get a debt crisis such as the one we had in September a year and a half ago, a year and a quarter ago in the UK? I think the chances of that happening are fairly high. I'd say at least 50%. So it's not an area where I'd want to put my money into the government bond market at the moment. And of course, if we do have a debt crisis, it will make the price of everything go down temporarily. But then, of course, it will subsequently lead to the stimulus, because the central bank will step in and start buying that government debt.
Yeah, I mean, you talked about prices. I think, everything that I experience, prices are going up. The only thing that went down this month was my gas and electricity, which is good. But we went to a steakhouse today for lunch, and it's not a cheap one nor a very expensive one, but you have a nice steak these days, you're gonna pay like 25 to over 30 pounds. And I remember 5, 10 years ago, a good steak was less than 20 pounds. So everything's going up. Even Rudy's groomer, she's coming, mobile groomer, she's coming in a couple of weeks. Her price has gone up. But she's good though. But I don't notice any deflation. I saw a headline in one of the papers here, and it said, "Oh, food inflation drops the most in record," and what they meant was that it dropped from like 8.7 to 6 point. The rise in dropped from 8.7 to 6.7. So some really misleading headlines, and that's why I do these videos, because a lot of people think everything's fine. We got a question here, Clive. Might interest you. It's for me, but I think you'd be interested as well. When silver goes to the moon, do you think there will be any issues with trading the silver in for the cash fiat? I'll answer it first. I don't think there will be a problem exchanging fiat for silver for fiat, unless there's a currency collapse and the currency becomes worthless. But if that happens, I'm sure you'll be able to exchange silver for goods and services. What's your view, Clive?
I think if we have a very large rise in the silver price, it'll become increasingly hard to buy it. I can illustrate that because when I was in Crans-Montana, I had the good luck to find a watch dealer who had some very old gold double eagles, and I decided to buy one for myself, which I thought was very nice. And I spoke to a friend of mine and said, by the way, I bought one of these. And he said, "Oh, can you get me one?" So I said, "I'll go back to the shop and buy another one." And I went back to the shop, and the shop owner said, he's a bit, I'm not sure if I want to sell them because, I think gold go up. Anyway, eventually he did sell me one, but I didn't specify how many my friend wanted to buy. And he was like, "Oh, I don't want to sell them all because this was gold, of course." But I can imagine the same thing happening with silver. Silver dealers at a certain point are going to say, "We want to hang on to our silver because fiat's going down the drain, and the only way I can preserve my wealth is to keep silver or gold or whatever they have." But if you want to sell it, I think there'll be many, many takers. I don't think there's going to be any problem whatsoever.
Oh, I mean, silver is money. There's a saying that gold is the money of kings and silver is the money of gentlemen. Paper is the money of uh, slaves. That's what they say. And barter is the money of peasants. I prefer barter than the paper. Went into town yesterday and I noticed in the last year or two there's a pawnbroker around and they've got quite a bit for sale, gold and silver. And I actually bought this 2.5 gram gold bar. It's quite nice. And the reason I bought it is that the price was the same as for the dealers, the online dealers. So I thought it's a good price. So I bought that. It's a Baird 2.5 grams. I remember in the 80s, they used to have the Swiss bars like that, Credit Suisse, and they used to put it on necklaces. You could, I think my mom had one. I think my dad got it for her. At the time, I wasn't really into gold. But
There are some lovely bars you could buy with a hologram on them. They call them kilograms, I think. But they're exactly like the one you showed, is sealed in a little packet. But the beauty of that is that you can wiggle them around and see the hologram moving, which guarantees that they're genuine gold bars by the original issuer.
yeah, they had another one there, but it wasn't packed. So I preferred this one. It was a bit cheaper, the other one. Someone's saying here, where is it? Why would silver go to the moon? There are millions of ounces for sale at most dealers. Well, I'll answer that first. I would say silver is one of the most undervalued assets, on the planet. Seeing that we're in 1980, it got up to $50, and now we're only at 23 or $24. And despite that, we've had massive inflation, massive currency creation. And yeah, I think there's also Mexico, the biggest silver producer. Their reserves are depleting. And the other thing as well is that with the price so low, it's not economical to like take silver out of stuff and recycle it. And the Chinese are big into silver, not just monetarily, I would say, but also for their economy. That they see it as a strategic commodity for, their renewable energy and whatever. What do you think, Clive? Uh,
If you go to the website of the Silver Institute, who monitor the production of silver and the usage of silver, and you look at the statistics for the previous years and the current year, you'll see a few things. First of all, the mined production of silver is less than it was 10 years ago. It's even though the price is higher, silver production is relatively inflexible to the price because it's mostly produced as a byproduct of other mining. Secondly, you'll see that the consumption of silver for industrial usage and things like tableware and jewelry exceeds the mined production at the moment. That's because the demand has been rising due to electric, photovoltaic, and so forth. The difference to make up the balance is coming out of recycled silver. That, according to the forecasts, the industrial use of silver is set to continue rising. In other words, the gap between mined silver and silver used for manufacture of things is set to widen. So it's a negative gap at the moment. In other words, there's more being used than is being mined, difference being coming from recycling. So that gap is set to widen. And as it widens, it means that more recycled silver has to come into the market. And the way you get the recycled silver into the market is by gradually seeing the price rise. So every time the price rises, someone somewhere says, I can get a better price than last week, and he'll go along to the pawnbroker or wherever and cash in his silver. So it's true. There's an awful lot of silver above ground, and each ounce of silver has its own price at which it would be sold. Some of it doesn't have a price, but for those who are minded to sell their silver, whether it be their knives and forks or their silver coins or their bars or whatever, they've got a price in mind, and that would include the silver dealers also, who are. I know some of them are literally hanging on to the silver for hoping for a higher or expecting a higher price. So they've all got their price in mind. But it could happen very easily that the price does spike because almost nobody I know, apart from a very, very small number of people, own even 1 ounce of silver.
Mm.
So you only did a change of attitude by a very small percentage of the population who decide that actually I should have a little bit of silver as a precaution, and the price could go significantly higher than it is at the moment. Now, that's not a forecast. I think my personal view is it'll probably creep up gradually due to the rise in industrial demand, especially from the automotive industry. But if people start to change their attitude about it, I don't mean the public at large. I just mean a very small percentage of the public. Then we might get a sharp and sudden spike upwards. We're at what, 20 something at the moment. It could easily go above 30. And of course, as you say, many, many decades ago, it was at $50 when the Hunt brothers were cornering the silver market.
Yeah, the other thing I would say is that the bullion banks, in my opinion, and also there's something called the Silver Users Association, and even the U.S. military, and they don't want silver. They want cheap silver because silver is very important for military use for war. And I think the paper market. Yeah, definitely keeps silver undervalued. I mean, with a ratio of above 80, gold to silver ratio, I think it's really a steal. And the other thing about silver is that it's a nice coin. It's a nice metal to have, I would say. Um, we got a question here, Paul, from Paul Clive. It says, Mario, I've come by several thousands of pounds. Would you buy gold, silver, or equities? I'll let you answer that first, seeing that you're a wealth manager, even though I have my
Yeah.
opinion as well.
Mary, I have to say I'm not an all-in person for anything, but I meet a lot of people who are all in on
Yeah,
Bitcoin or all
and
in on
this is
gold.
not
Or
this is not financial advice either, Paul. Just to let you know, this is what we think. Go ahead, Clive.
I like to, for any amount, to the extent possible, I like to spread it around different things because we don't really know what the future holds. The one thing I would say to Paul is you don't really want to keep too much in cash. You obviously need some enough for your emergencies and your day-to-day needs, and what happens if you lose your job or have a sudden illness. Keep some aside for that. But for the savings, the money you're putting away for the long term, don't keep it in cash and don't keep it in bonds. I think that's a bad idea. The inflation rate will basically make it worth less faster than the interest you're going to earn, especially after tax, but even before tax. And therefore, I think your choices are if you can find a way of getting a mixture of assets, that would include some gold and silver coins at home, but it would also include equities. It would also include real estate. If you can't buy your own home or a flat or a home extension, then there's real estate investment trusts in every country. And you might want to have a very small exposure to Bitcoin. I did a little asset allocation table about 6 months ago on LinkedIn, and my suggestion was maybe a 2% exposure to Bitcoin would have been a good idea. I guess with the price of Bitcoin having risen, that'd be about 4% now.
Yeah,
But if you've got 4%, I'd be reducing it down to two.
yeah. Linda, oh, sorry. Yeah, Clive. No.
Oh, I was just going to say on gold and silver. Back then, when I did the asset allocation suggestion, I said about 6% in gold and 6% in silver was my idea for a starting point. Obviously, that's not financial advice. It's really a starting point of discussion.
Yeah.
But that would be today with the price rises of silver and gold, probably about 8% now.
Yeah, I mean, personally, if my answer to Paul is, equities, yes, if you If you know about a business that is very interesting and you think it's a good value, yeah, buy into equities. As for like Clive, I think cash is not a good thing unless you want to just keep a bit for emergency. But the rest, I would personally spread it into physical gold and silver. Someone's asking here, Linda Adrid or Adrid, you may consider interviewing John Perez of Silver PSYOP. I have. I interviewed him. I had him on with David Morgan about a month ago, Linda. If you look on my channel and search for it, I interviewed him with David Morgan. I probably will have him on again, though. Um,
Uh, Mario,
yeah.
one of your people is asking which miner or ETF is a wise investment. Um, so perhaps I'll just comment on that one. If you're buying an ETF, well, first of all, I would say an ETF is probably the way most people should go rather than buy an individual company because that's too focused on one thing. The two best known ETFs in the gold mining sector are known as the GDX and the GDXJ.
Yeah.
The latter one being the juniors, which are the small mining companies, and the main one, the GDX, being the larger mining companies. Both of them should have a leveraged movement when the gold price moves in both directions. And the reason for that is, let's say you have a miner whose cost of production is $1,800 an ounce, and the gold price is, let's say, $2,000. So they're making $200 of profit. Well, if the gold price goes up to 2,100, that's $100 more. That profit on will their cost will still be 1,800, but their sale price will be 2,100. So their profit will go from $200 to $300. So that's a 50% rise in their profit. And therefore, the leverage effect on the gold miner will be much. So you've only had a sort of 5% rise in the gold price, but you've had a 50% rise in the profit of the mining company. So the mining companies will move a lot faster. And if you buy the ETF GDX or GDXJ, the junior miners, the leverage effect will move it in both directions, up or down with the gold price, but much faster. Now, that's not financial advice for anyone in particular. I just want to say that
Yeah.
that's the way. If you have to choose, and the specific question is which ETF would you choose? Well, that's the specific one I
Yeah.
would choose, and I own them both.
Yeah, I mean, here in the UK, for example, if you have a nice account like where you can put 20,000 a year to invest, uh, I don't think they allow you to buy ETFs. So what I've done in the past is I've looked at the prospectus of GDX and GDXJ, and I bought some of their major holdings. That's the other way. If you don't want to buy an ETF, you look at their prospectus, their holdings, and you buy, you know, let's say two of the top five companies, two of the from the top 10 to the top 20. You can try to match the ETF as well if you don't like the ETF. So that can be done as well, I would say.
Should we just explain what an ETF is? You and I
Yeah,
know, of course, but I'm
yeah,
not sure all your listeners
that's
know.
right. That's a good point.
Um, an ETF is an exchange traded fund, and it's designed to match the performance of the underlying companies, or rather, the index of those underlying companies. Now, an ETF is the kind of thing where people can send their. It doesn't happen except for the institutions, but you can send in your shares and get cash. Based on the net asset value, or you can send in cash and get shares based on the net asset value of the underlying index. So unlike a company, an investment company, which can trade at a premium or a discount to its assets, an exchange traded fund in general trades almost exactly at the value of its assets, because if there's any deviation, people will send in their shares or send in cash to change from
Yeah.
one to the other. So that's the advantage of an ETF. And the other point about an ETF is that it will own every share in the index. So instead of buying an individual company, you own a wide diversification set of shares, and you'll do what the index does as opposed to what the individual share does, which might be better or worse than the individual share you might have picked.
Yeah. Another thing about mining companies is that, you have the majors like Barrick and Newmont who produce gold, and their share price will move uh, quite well when gold goes up, or not as well when gold goes down. And then you have like the mid-tier companies that produce, but then there's something called, the junior, the exploration companies. They're just trying to drill holes to find gold, and eventually they get bought out by the big producing companies. So you've got to be, GDXJ, I think, is more geared towards the explorer, and that's very speculative. But if you really just want to hold a company that produces gold, I recommend the GDX and the major producers. Clive, someone has been asking about the great taking, and before I ask you the question, just wanted to say I have tried to get in touch with David Rogers Webb. I don't think he wants to be interviewed that much. I think he made a video documentary about his book as well recently. And I've made several videos about it. The first one in September, it got like 75,000 views. So my question, Clive, is someone's been asking, have you heard of The Great Take, and what do you think?
So yes, on LinkedIn, which is the only place I write articles, I did write a short review of the book 2 or 3 months ago. The Great Taking basically says that all your assets are at risk if you leave them with an institution such as a broker or a bank. And the reason they're at risk is because although you think they're segregated and they belong to you and they owe you those assets, in the event of a failure of the institution, the creditors of that institution can and have in the past taken the assets which belong to the investors, even though those assets were not on the balance sheet of the institution in question. That's the premise of the book, The Great Taking. I tried to verify what was written in the book because he did give some specific examples of when it had happened. I think the main one was relating to Lehman Brothers, where Lehman Brothers were holding assets in custody for certain people. They weren't on the balance sheet of Lehman Brothers, but another institution, which I won't name in case I get it wrong, but a very large institution, was holding some of those assets as custodian and knew or ought to have known that those were client funds or client securities and not assets of Lehman Brothers. In any case, the institution in question hung on to those assets, refused to hand them over, and a court found in their favor and said, yes, you can keep them for whatever reason.
Yeah, it was
Basically,
JP Morgan, Clive.
yeah, I didn't want to say in case I got the name wrong, but
No, it was JP Morgan. I
yeah.
think that's the other point about the Great Taking, that the too big to fail banks, they'll be okay. But we won't, if we hold even mortgages, even the houses. He said if you have a mortgage on it, it could be, and they're susceptible to that. But he says that he's not trying to say it's going to happen, but it's a possibility.
Yeah, I mean, I tried to verify what he said, and so I turned to the actual papers that you refer to, the between J.P. Morgan and the uh, trustee in bankruptcy of Lehman Brothers to try and find out if what was written was absolutely true, or if there were any tweaks or something I should understand. Unfortunately, the papers were very, very long and far too complicated and time consuming to fully absorb. So I can't actually say that I've been able to verify that what he writes is definitely true. And there's more to it than meets the eye. And again, there's many, many countries, and each country has got its own laws. My understanding of the law here in Switzerland, and I'm sure it's the same in the UK, is that if your bank holds customer assets in custody for you, and they're not on the bank's balance sheet, my understanding is that they should be safe. But that apparently was the case in the United States, and they weren't safe. So
Mm,
who knows?
Yeah.
That means you've got to have something outside the system, really.
Yeah, that, and the thumbnail of this live stream is like a picture of the ocean, really rough waters. And I used to sail when I was a boy in Brazil, and my dad was a sailor. And you know, if ever, and I didn't really, I sailed like in the bay in Rio, but if it was really rough and windy, I wouldn't go out. So you have to make a judgment. It's the same thing, with investment. If you think things are too rough, yeah, don't participate, I would say. But I read the book, and he does use a lot of references, and I haven't checked, but I assume that he's not lying about them, and he's got all the footnotes and everything. And the other thing that he says, it's been done very gradually. He said that the guy who took over the DTCC, the Depository Trust Corporation, or started moving into this moving, from stock certificates, physical, to like digital. The guy who started the project in the early 70s, he wasn't even involved in finance. He was a ex-CIA guy. So that is a bit worrying. But anyway, someone is
There's
at
a sorry, I was going to say there's another very interesting part of the book on this where he talks about, I think it was his grandfather who had an account in the bank in the 1930s, and in 1933 President Roosevelt shut down the banking system because there was a run on the banks, and a few weeks, maybe a week later or 2 weeks later, they opened up the banks again, but only opened some of the banks,
yeah.
i.e., the sound banks. Now, Roosevelt came on in his fireside chat, as they called it, and said to everybody, when the banks reopen, your money will be a lot safer in the banks than keeping it under the pillow or at home.
Mm,
And of course, people lined up to return the money. But unfortunately, this in this book, he's describing his grandfather. He had, I think it was grandfather. He had some money in the bank, but his bank was one of the banks which never reopened, and
yeah.
literally they lost everything. But he went on to say that those who owed money to those banks which never reopened still had to pay their debts because whilst the assets were lost, the liabilities, you remained liable for your liabilities, whether it be a mortgage or a loan, and those liabilities were transferred to other banks who continued to collect on those assets. So if you owed money, you didn't get away with it when your bank went out of business. But if you had money in the bank, you'd lost it all.
Someone is asking here what I think about Stephen Hawking being on the Epstein Island list. So I'll show you. Someone sent me this weekend at Epstein's Island. So that's quite funny. It's
Weekend at Bernie's. Yes,
Andrew,
that was a good movie.
Andrew Clinton and Stephen Hawking. So yeah, actually, it's not surprising to me because I knew that Stephen Hawking had been on that island because I've been following this. It probably hasn't been, in the mainstream. So a lot of the things that are coming out about this are not new to me. But yeah, have you got a view on that Epstein situation, Clive?
Yeah, as far as I'm concerned, I shrug my shoulders and I don't care.
Yeah,
So,
yeah,
I think a lot of people don't care. It's a great news story, and
yeah,
the newspapers are going to have a field day for the next few months on
yeah,
that one. But I really can't be bothered to get into it and read it.
yeah. I think actually personally, I'm not really interested in the details, but I think overall it's this Epstein situation is one to do with blackmail personally. And I think there's, I don't know who was behind Epstein. I have my idea, my speculations, but it's high up. And, I've looked at the Black Book. It's been public for years, his list of clients or contacts. And it's the creme de la creme. And, it's like you've got the uh, very wealthy British and American people on that list. So yeah, we'll see. We'll
Yeah,
see.
well, ever since the beginning of time, various powers have used sex. I'm allowed to say that word
Yeah.
as a tool of blackmail to entice important people into motels, if you like, and they're secretly filmed or
Yeah,
whatever. And you can imagine an awful lot of things have gone on in the world which
yeah,
didn't ought to have gone on because the powers that be have been blackmailed due to
yeah.
their personal failings in that area.
Yeah, even Tony Blair, I think there's a story about him in the 70s that he was arrested for something called cottaging, which I'm not really sure what it is,
I don't
but
know.
some people might know it. And his full name is Anthony Charles Linton Blair. But when he was arrested and taken to, I think it was somewhere in London, to the prison or to to the police station, he signed his name as Charles Linton. So there you go. So anyway, Scott 49140. I'm asking constantly, just wondered if it's true that Xi Jinping has been meeting, is it true Xi Jinping have been meeting recently? Could this be example of political chaos in the horizon? Who's he meeting with, Scott? True, Xi Jinping have been meeting with whom? I don't know.
Well,
Yeah.
there was a meeting with him and Putin a few months ago, I
Putin.
believe.
Oh yeah. Do you mean Putin? I think the BRICS, the enlargement, BRICS expansion is all part of this, and uh, and some people might say BRICS, they're trying to, destroy the dollar or disrupt it. I look at it another way. They're just like trying to protect themselves because they can see what's coming in terms of the dollar. Um, what do you think, Clive?
We've seen the USA use sanctions against various countries. I mean, you can't now use your dollars. Venezuela has been sanctioned, Russia's been sanctioned, North Korea has been sanctioned. I'm sure there's several others. And I think countries which are not aligned with US views say we need a plan B because we never know when they're going to, something's going to happen. We might have some internal terrorist group, whether we approve of it or not, but it's the reality here. In places like Iran, you've got these little cells of maniacs. If some terrorist group inside our wall, our country, does something which the USA doesn't like, we might find ourselves sanctioned and we can't use the money. Yeah, let's have a plan B and try and use something other than the US dollar so that they can't actually stop us from doing our trade and doing our business. That's quite normal.
I just shared this, Clive. This you've been looking at this, and I have as well. U.S. interest expense, so it's gone over $1 trillion here, as you can see. I think that's the other reason why the BRICS countries are, trying to diversify away from the dollar. And I'm not saying that the BRICS currencies are any good, but if you're gonna, and that's why they're also buying a lot of gold, because the dollar is becoming more and more flimsy. It's becoming more like a banana republic. You've got the political division in the United States between, red and blue, and you've got this kind of fiscal situation going on where the debt is, we gone over 34 trillion national debt. I think it's expected to go to 35 by the end of March, and the interest expense now is over $1 trillion.
So the national debt in the United States has been rising as a percentage of GDP constantly for the last 20 years, or add some. And it looks like it's starting to rise at a faster rate versus GDP than before. What that means is that the interest expense continues to rise as well as a percentage of GDP, but we have a double whammy going on now. Over the last 15 odd years, the interest cost has been very, very low because we were in most countries of the world, but and the United States at zero, or some countries negative, and the United States, I think it was down to 0.25% most of the time for many, many years. And that meant that the borrowing by the US Treasury on behalf of the government was they borrowed money at a very low rate of interest relative to where the interest rates are now. Now, those bonds, and I believe there's an awful lot of them going to mature in the next 2 years,
Mm.
are maturing at rates of 1.5%, 2.5%. But when they mature, they're going to have to borrow that money again, but at a new rate of interest, which is currently closer to 5%. So that will accelerate the interest cost to the US Treasury. And that does mean that the interest cost as a percentage of the tax take will be continuing to rise. Right now, I think last year it was something like 8 or 9%. This year it's going to be about 14 or 15% of the total taxes they take, and that's very approximate. But that's set to go up, and it could, by the end of this decade, be approaching 100% of the taxes, which obviously is a situation like if you can imagine an individual with a credit card and he's juggling the cards. Every time he has to repay the first card, he borrows from the second card, and then he borrows from the first one to pay the second one, and so forth. Now, what happens when the interest on those two cards starts to exceed the total of his income? There'll come a point where he finds it becomes impossible to borrow anymore because everybody says you're never going to repay. You can't even pay the interest. You can't keep juggling cards forever. Now
Yeah.
we're not there yet, but there's a danger by the end of before the end of the decade, we could get there.
Yeah, and the other thing, I think there's 7.5 trillion of treasury bills, notes, and bonds maturing in 2024, and then another almost 2 trillion in new in debt from the deficit, which is huge, which is like 700 billion of refunding every month. And normally the refunding is like 100 to 200 billion. So, since the end of October, yields on the long term, longer end have fallen in particular. But I've noticed that since the beginning of the year, they've rebounded, like the 10 years gone back above 4%. Paula G has a question here, Clive. The debt is on an algorithm. How do we interrupt the loop? I guess Paula means that the debt is gone parabolic. How do you interrupt it? Uh, I, I think the only way to interrupt it is for the Fed to raise rates massively, but then they'll destroy the system. I'm afraid I'm not sure if you mean that someone's really setting, someone has an algorithm for the debt, but I think it's out of control, and that's the problem. And unfortunately, I don't see politically, the red and blue in the US or Labor or conservative in the UK. I don't see the political will and I don't see politicians understanding the seriousness of the situation. So that's why I try to stay outside the system as much as possible and keep stacking gold and silver. What do you think, Clive, about what Paula just said?
So as far as the US is concerned, they have their budget, which stretches out for a number of years. And there's two components to the budget. One is called the non-discretionary spending. That's spending on things like Social Security and Medicare. There is no choice in that. That absorbs about 2/3 of the spending, and the other 1/3 is half the military and half what they call discretionary spending. So that's basically the discretionary spending is about 1/6 of the total spending of the US government. Now, even if they get rid of the discretionary spending bit, which is the only bit they can tweak, they will still have a massive deficit. So that's not going to do it. Um, they can't obviously cut Social Security or Medicare. That would be one, it'd be illegal under US law at the moment. And secondly, if it was to happen, there'd be rioting in the streets and a lot of social unrest and political unrest. So I don't think the politicians have got any appetite for that. The other side of the coin, they can't, as I said, cutting the discretionary spending, even if they cut it to zero, it wouldn't change anything or wouldn't change much in terms of the deficit. It would still be there. So the other thing they could do would be to raise taxes. But of course, that would be a little bit like the turkeys voting for Christmas.
Hmm.
I can't see that really happening. So I think the reality is the present politicians would like the situation to just carry on as before, with the deficit getting bigger and bigger, and hope that everything will be all right. And of course, as the deficit gets bigger, they get richer.
Yeah, it's the Dick Cheney School of Economics. Deficits don't matter. I think that's what he said about 20 years ago. Moonraker is saying, Clive, I don't know if you've been following this. He says the U.S. Congress reaches agreement on 1.59 trillion top line spending bill for 2024. Um, yeah, I'm not sure what that means. I think it's defense spending and other spending. It says here 886 for defense and 704 billion for non-defense. I guess is that discretionary spending? Top lines.
Well, the yeah, so that's if you talk about spending of I think it's 6 trillion, something like that they spend. Um, so we're talking here of in his figures, yeah, 1.59 trillion. That would be that'd be roughly the 30%, which is the uh, military and discretionary spending, of which half is military and half is discretionary. It's the only bit they could really cut, and I don't think they're going to cut military. That's for sure. And the discretionary spending, well, everybody's got their pet project, and I don't think any politician's going to vote against his own pet project.
I agree. I'm just answering a question here. All right. Let's have a look here.
Somebody's written, "When people have no money left, they'll vote for a dictator."
Well, I'm not sure we have a representative government anywhere these days. I think, unfortunately, the big corporations have hijacked government, and that's why, like Clive said, that's why the deficits and the debt keep growing because the politicians make more and more money, and yes, they give money sometimes to welfare and stuff, but the people who really benefit are the big corporations and the politicians. I mean, you look at politicians, Tony Blair is worth hundreds of millions. Obama bought a $14 million dollar house in Martha's Vineyard. They're all at the, they're all corrupt, and unfortunately, he could be right. Maybe they'll vote someone to crack down on this because I think it was Socrates who said that democracy usually ends up bankrupting a nation because the 51% will vote to take the money from the rest. But in this case, I think the top 1% is voting, voting people in to take the money from the rest, unfortunately. Is that how you see it, Clive? Or
Well, it's kind of the way it tends to go. I mean, it's not. I think it's every political system we've ever had since the beginning of
yeah,
time. Those who are in power do what they have to do to enrich themselves,
yeah.
and sooner or later there's a change in the situation because people are hungry and they're out in the street. And they in the old days the usual thing was to behead the king.
Yeah. Clive, I saw this on Friday, and it was a comment from Janet Yellen. She made quite a few million after she left the Federal Reserve, speaking to bankers on Wall Street. But she says Treasury Secretary Yellen declared the U.S. has achieved a long sought soft landing after December data showed pickup in job growth and wage gains. I remember, Clive, she said back in 2015 or 16 or thereabouts that QT, that was started in 2017, I think, would be like watching paint dry. And then by 2019, we saw a massive repo crisis. And then by 2020, the balance sheet of the Fed went from below 4 trillion to almost 10. So do you think this is like she should have kept quiet, saying that the US has avoided a soft landing? Is this her Jim Cramer moment?
Well, Janet Yellen's job is to sell treasuries because that's the way the US government funds itself.
Yeah.
So what you want to say, if I was in Yellen's shoes and I was trying to encourage people to buy treasury bonds, I'd certainly say we've got a soft landing. Interest rates won't go up anymore. Everything's going to be all right. The economy's sound. Therefore, we're going to have more revenue. We're going to spend less, and those treasuries you bought are all going to be jolly good and jolly sound. Therefore, you could quite easily go and buy our 30-year or even 50-year treasury and feel comfortable that it'll still be worth what it's worth today, 20 or 30 years down the line. That's
Yeah,
the message supposed to get out.
yeah, buy perpetual treasuries. They should issue those and should
Yeah,
come out.
with
The
perpetual zero
treasury,
coupons.
yeah, treasuries are as good as gold. Yeah, right. Uh, no, that's a good answer. Yeah, she's just selling her product, like you said. There's another thing I wanted to look at here. Where is it? Uh, oh yeah, we'll go to the stock market and look at these magnificent seven. This is an interesting tweet. Well, you don't say tweet anymore, a post by Ronnie Stoffler, and says the market cap of the Magnificent Seven is now the same size as the combined market cap of the stock markets in Japan, Canada, and the UK. This reminded me of the stories back in the 80s and early 90s about Japan. One of them was that the real estate of the Imperial Palace in Tokyo was worth more than the whole real estate in the state of California. And that I'm sure you remember at the time, Clive, Japan was like everyone wanted to copy the Japanese because everything was so great there. And it feels to me the same here, these Magnificent Seven, that they're doing something so great, that their market cap combined is bigger than, the market cap of these countries.
I think it's only a question of time before they're broken up. There's a lot of remember there was was it National or Standard Oil Company in America which got broken up, and then we had the American, it was AT&T, got broken up into the baby bells because were just becoming too big, and the government didn't like the power that these large companies held. So I think it's whilst these companies will continue to get bigger and bigger because they're very, very powerful. I think the politicians aren't too happy about the power they wield, and probably they'll try and break them up at some point.
Don't you think, though, aside from being too big and monopolistic, that they're overvalued as well?
I don't own any of them because I find them overvalued. I'm a value investor for various reasons, which is more of a Warren Buffett style or uh, Benjamin Graham style. I find that if you buy things which are relatively undervalued, but still with the growth, it's just a question of time. It might take some years before they become more highly valued. So I also find that if you buy overvalued things, they might continue going up for quite a long time, and they can stay overvalued for many, many years. But at some point, the reckoning comes, and they come back down to earth. And the most classical evidence of that is what happened in March 2000, which was the end of the dot-com bubble, as it came to be known. But I recollect that back in late, well, let's say even early 1999, stocks were literally going up by percentage points every day, every week.
Mm.
It was just one of the 1999 was one of the most amazing years ever because we were already in a very, very overvalued market at the start of the year, after having had huge rises in the stock markets in the previous years. I can't remember what they were, but they were well into double digits,
Yeah.
20 or something percent. And 1999, I think the Nasdaq index went up something like 90%.
Yeah, I remember I bought some Amazon shares in 97, 98, and they went up 50% in a week or so. It was crazy. And anything that had .com on it did well for a time. I've got here a chart, Clive, of gold going back all the way to the early 70s, and it's a line chart. And it's a quarterly one. So this is where the gold price closes each quarter. And I think this is significant here because it looks like this level here, which is like just below 1800, was really key because it means we've started now a new leg up, and not just because we closed above 2000.
I on my LinkedIn profile in one of my articles, which people could read, I I drew a graph on a logarithmic scale showing the debt of the United States versus GDP and the gold price, and measuring one against the others, both starting from a starting point of 100. It seemed, when you look at the graph, that the gold price tends to follow the total debt of the United States, with moments where the gold price is moving up much faster, and moments when it's moving uh, or moving down, but over a long period, it's still following the debt. Now, the interesting thing that comes out of this is during the times when the debt is accelerating, the gold price is accelerating faster. And when the debt is decelerating, the gold price is falling faster. So we are now moving into a phase, and we have moved into it actually already, when the debt is starting to accelerate compared with previous periods. So if the chart holds good, the gold price should accelerate away from the debt. In other words, we should see, if the debt is rising by 7 or 10% a year, we should see the gold price rising faster than that.
Yeah, and I've got here, I switched this chart to a bar chart and also logarithmic. And logarithmic looks at it in percentage change terms. And, you could argue that gold has been going sideways since 2011 and now it's breaking out. And that even if it goes to, let's say, 2,600, there's still a lot of room on the upside on the logarithmic chart. So, yeah.
I would say the next few years, a 50% rise in gold would not be surprising in the slightest. So that would be basically putting gold at 3,000.
Yeah.
I mean, we've come up from 1,600 or so already. Yeah, I think we're in a secular bull market now for gold.
Yeah, I agree. Let's go back. We're almost have 3 minutes to go. Let's see if we have any more questions, guys. Oh, there's one here. Andrew Brown, remember to give Mario a thumbs up. That's good. Yeah. If you grow your own potatoes, you can also make vodka. Have you thought about that, Clive? Vodka.
Yes, Clive Thompson vodka. Now that would be an interesting one. I wonder if I could sell that.
Uh, let's see. Yeah, any questions, guys? Yeah, we've got 2 minutes for your questions, and then, oh yeah, Clive, what is your definition of a few years? 3, 5, or 10? I think is in reference to the gold price.
Well, you know, one of the things I've learned over my 50 years is you can make a prediction, but never put a date on it.
Yeah.
Uh, or you could give the date, but don't say which direction it's going to move.
I actually think, and I guess, yeah, it's, I think it could be 3 years, you know. But I could be wrong. It could be less, because I think
Uh,
it's actually breaking out. So,
I would say that I don't think the currencies that we know of are going to last a decade in the form that we currently see them.
uh,
And I think that's good for all assets which are not currencies themselves.
yeah. I think also emerging markets are probably a good place. This is not advice, of course. Emerging markets, I think the equities there are a good place to be relative to Western and US markets. I'm not saying I would put everything into it, but it could be a good relative value.
Well,
What do you?
I've been studying looking for specific stocks. I spent many hours a day for the last few weeks looking for specific stocks around the world which are attractive in terms of high growth, low price to book, low price earnings, high dividend, that sort of thing. And the only place you're going to find that is in the emerging markets, and particularly Hong Kong, which has its political risks if something happens with Taiwan. But yeah, you think things are cheap in the emerging markets and expensive in the Western markets.
Yeah. Apparently, the question about Xi Jinping was that he's meeting with Biden. I think he met with Biden in San Francisco, didn't he? There was a summit there. Uh, I'm not sure if it
Yeah,
means much.
yeah. There was. I seem to recollect there was some kerfuffle about that, but I didn't pay much attention to that one.
Yeah. Frank Cervini is asking where in Europe will be hit the hardest. Uh, I don't know. I mean, I think the whole of Europe is already in pretty bad shape. I mean, the UK isn't in good shape. Germany, in relative terms, has been like really hit hard because of the energy situation. Um, what do you think, Clive? You might know a little more about what's going on in on the continent.
It's very hard to say. Every or most countries have got their own problems of various descriptions, whether it be budgetary problems, spending too much, or they have energy problems, or the prices are rising faster than is appropriate for the economy. The problem with Europe is, I mean, it's a benefit from another point of view, but the problem is the single monetary union. Every country being subjected to the same economic forces when it comes to managing the economy. So the European Central Bank is trying to manage interest rates and everything else when it's got 20 countries which are on the euro, and each
Yeah.
of those countries has a different situation.
Yeah, I think Italy has, not benefited at all from the single currency, their economy. It's put them on a straitjacket. I'm not saying that, having maybe having the lira would be a good thing, but they're certainly inflated. Someone's asking here, Clive, uh, the question is, how do you feel the end of the first quarter will affect the next half of the year? I guess he's saying, you know, does the first quarter, if let's say if the first quarter is negative, does it actually mean that we'll have a bad year? I've heard as well that in an election year, presidential election year, the stock market actually goes up 14% on average.
The stock market never seems to do what the average is. The if this year I think the average prediction is sort of 7 or 8% up, and last year was the same, and the year before it's the same. Sometimes a bit higher, a bit lower, but usually the average prediction is wrong by something of the order of 20%. So it wouldn't surprise me if we have a upwards stock market of 30+% or downwards of 20. That either of those are possibles. And I don't have a strong view on which one it is, but the way I position myself is for the upside, because I think the danger of positioning yourself for the downside is that you end up holding a lot of fiat cash waiting for that crash to happen. And if it doesn't happen, you know for sure that day by day the value of fiat is being inflated away.
Mm. Crypto Dream, thank you for your super chat. He asks, how difficult was it getting subs and keeping integrity? Being crypto, everyone wants 100x, and I'm more into money and economics of crypto. Well, I try. It would be nice to get to 100,000. I guess that's just a number, but I don't think I just try to produce the content, create the content and be honest, and talk about what I believe in, what I think. Yeah, and I'm not here to say that gold is going to give you 100x or anything. I mean, I do talk about some mining companies. But I think the purpose of my channel is to really expose and make people aware that the money that we use, the fiat currency, is actually not fit for purpose. Yes, you can try to protect that by buying stocks or cryptos or, you know, and I think that's one of the bad things about this system that people risk a lot of their money because they feel they need to. But what I'm trying to say, I think there's an easier, simpler, safer way of protecting that, and that's through gold and silver, mainly because for thousands of years they've held their value. You go back to Roman times, you could take an ounce of gold and buy a nice toga and a pair of sandals, and you can still do that today. So that's what I try to do.
We've got an important event potentially in the week to come, this week coming, and that is whether the SEC will or will not, we don't know, approve a Bitcoin, well, all of the Bitcoin ETFs. So there's many, maybe 12 or more companies which have applied for an ETF related to Bitcoin. And Gary Gensler is very much against it, but not everybody at the SEC is totally against it. So they're giving it about 80% probability that the Bitcoin ETF will be approved this week. Now, if it is approved, this might have an effect in some way, shape, or form on the gold market. And I'm not making any predictions as to what's going to happen to the Bitcoin prices if it is approved, because, first of all, there's a huge number of people who've got quite leveraged positions betting on the upside. I mean, nobody in their right mind would be shorting Bitcoin at this point. Well, I say nobody in the right, it would be not on a leverage basis anyway. But we don't know that even if the Bitcoin trusts are approved, it may well be that there are so many people who've got long positions that they start to unwind them, and we see a decline in the Bitcoin
Yeah.
price, and that might well mean the money moves into gold.
Yeah, well, there's a note saying buy the rumor, sell the fact, so people have been buying, maybe Bitcoin because they expected to get these ETFs. And if it does come out, they might sell it. So who knows? Okay,
And
Clive. Yeah, go
and
ahead.
and if it doesn't come out, they might sell it as well.
Yeah, yeah. So there you go. Uh, Clive, thank you very much for your time, and I wish you a prosperous new year, and hopefully you'll be back on the channel. And yes, and we'll keep in
Thank you,
touch.
Marianne. Once again, Happy New Year to all of your listeners and viewers. And I'll just remind your viewers to give you the thumbs up.
Yeah, thank you, everyone, for being on. I think we got over 1,000 concurrent viewers, which is pretty good. And we'll keep in touch. Take care.
Thanks. Good night, Mario.
Uh, just ending the stream here.